I am right here. Hello, John. How
Hello,
are
Anka.
you?
Where are you
Hi,
broadcasting
Sebastian.
from? Where are you broadcasting from today? Is it Florida
I'm
or
in Michigan right now.
Michigan? Okay.
Yes.
Um,
Came here for the summer.
Very nice. I spent a summer in Michigan and it was lovely.
Hmm.
Um, Go ahead and get your PowerPoint up. Anka is a professional trader, investor, and market analyst with over 25 years of trading experience. She is the founder and CEO of TradeOutLoud.com and is known for her precise approach to daily income style and wealth generating trading in any market environment. Welcome, Anka Metcalf.
Thank you so much, John, for having me here today.
So the first time I was in Michigan was 1963, and that was the year the Beatles came to the United States.
Wow, that
And
is
everybody
too
was
long
going
ago.
crazy. And then the next time I was hitchhiking through Detroit, and the Detroit riots happened. And that was 1967.
Yikes.
And all the
Yep.
freeways into town were closed, so we had to go around Detroit, and then we hightailed it up to Canada to get out of the country because,
I know it is so cool. We are just from where we live, we're about 40 minutes away from Canada.
well, they closed the Canadian border there, so we hitchhiked up to North Dakota and crossed there and had no problem.
Oh, wow.
That was what the 1967 was like.
Okay.
Anyway, Anka, I hope everything is well, and um, you have until 5 minutes before the hour, and
Perfect.
go ahead and mute myself, and you have until you have the floor.
Okay, thank you so much, John. And again, thank you so much for having me here today. Such a beautiful anniversary, the 25th anniversary. So, thank you, everyone, and good afternoon. And before we actually start, if you've ever felt like you're working hard for your money, but your money isn't working hard for you, then you're exactly at the right place right now at the right time. Because today I'm going to show you a different approach to building wealth and also generating income. One that doesn't require staring at charts all day, and it really doesn't require quitting your job or becoming a full time trader, a full time day trader. So, this presentation is called Swing into Wealth because it's exactly what we are going to discuss how everyday investors can potentially create gorgeous, beautiful, extraordinary results by capturing powerful market moves that unfold over days, weeks, and sometimes months, depending on the market environment. So, over the next hour, we'll discover together why investors underperform and why day traders overcomplicate the market, and how simple it is to have a repeatable system, swing trading, and basically trading a simple strategy that can bridge the gap between slow investing and successful day trading. So I'll show you the exact framework I use, and I have also included a set of rules in here. So we're going to go through all that. And I will show you the exact framework of how I identify high probability opportunities, how I scan for them, how I manage the risk and position for potentially explosive gains while keeping time commitment to a minimum. Because this is the goal. A trading and spending time in the market is a lifestyle and not a job. So, whether you're looking to grow your retirement account, or you're looking to supplement your income, or just generate income, or you know what, simply take control over your financial future, today's presentation could completely change the way you look at the stock market. So grab a notebook, eliminate any kind of distraction, and get ready because by the end of this webinar, you'll understand how to start putting the power of swing trading to work for you and begin your journey to swing into wealth. Now, before we begin, let me ask you a quick question. What if you could identify stocks before the crowd notices them? Hold them for the most profitable portion of the move because you can never nail the exact low and the exact high. It's all about the core of the move. And potentially grow your portfolio without spending hours glued to the screen every single day. Now, this is exactly what we're going to uncover today. So, hi everyone, my name is Anka Metcalf. I am the CEO and founder of TradeOutLoud.com. It is a trading education firm that is specialized in educating individuals how to day trade, swing trade, and invest into the market. I have been focused on making my money work for me as an investor, swing trader, and a day trader for the last 25 years. I also come with 10 plus years in investment banking and hedge fund experience, and I have been dedicated to improving people's lives through trading and investing for the last 15 years. And probably you're going to be wondering, like, why 15 years? Let me tell you something. Trade Out Loud came about 15 years ago because I was doing a lot of pro bono work even 5 years before that. Yes, I helped a lot of my friends, a lot of my acquaintances through the not only through the dot-com bubble, which was before that, but I helped them through the 2008 financial crisis. I have been dedicated to improving people's lives, trying to make them understand that whenever they see a red market, it's a buying opportunity. So one of the things that I've learned very early on from my institutional years is that you never sell on red, okay? And you buy on red when it's on support. So this is exactly what we're going to be talking about. And I am a successful trader and investor without a losing year to date. And I'm not just saying that, but my stats are saying that, and the stats are on our website, which is tradeoutloud.com. I specialize in high velocity moves, which means that I'm looking for inflection points on the chart that accelerate the move into the next target. So here's my agenda for today. I'm going to be sharing the exact framework I use to spot high probability swing trading setups before they explode. And I'm going to show you some of my recent trades, show you the proof, show you where the money is, show me the money, and how to make your money work for you, even if you can trade part-time. And basically what I'm talking about is swing trading, something that you could do maybe less than 10 minutes a day. So do I have your attention? Like 10 minutes a day? Are you kidding me? This is perfect. So do you want to find out the hidden wealth secrets of the top 1%? Well, here I am going to share with you that massive secret. So I'm going to also show you why day traders stay broke. And can you guys guess why day traders stay broke? All right. Well, day traders stay broke, and I'm going to get more into this because they do not understand risk properly. They overtrade. Day trading by nature forces you to place more trades in a day. I'm a day trader as well. You have to really, really, really dedicate so much time to understanding this skill. So it takes a lot of studying and understanding of price to become an excellent day trader. Because guess what? To be a good trader doesn't cut it. Okay? You're either exceptional or you're a failure, because a good trader is basically a break-even trader or a trader that is not really doubling, tripling, or quadrupling their accounts. And investors are too slow. So I don't know about you guys, but what I really love is instant gratification. Don't you love it when you have a trade and it triggers and then it starts flying into your target? Oh yeah, you know what? I understand there are trades that stop out. But what you have to do is cut those losses fast and let the winners run, because that's the key. So most day traders stay broke because they focus on making money quickly instead of managing risk. And risk is often the cause of accounts that are being blown out. They overtrade, They chase moves, they ignore the stop losses and treat the market like a casino. One or two emotional decisions can wipe out weeks or even months of gains. So you have to be really, really, really strict when it comes to day trading. On the other hand, many investors stay slow because they rely solely on the buy and hold strategies. Like Warren Buffett. He bought Coca-Cola like decades ago and he's still holding it. While long-term investing can build wealth and generational wealth, it often requires years or decades to produce meaningful results, leaving opportunities on the table during changing market conditions, or even into the AI era in which we are right now, which is like amazing. There are amazing opportunities. So the solution is a hybrid approach. Use active trading to generate income and cash flow while simultaneously building a portfolio of quality investments and for long-term wealth. So trading provides the opportunity today. Investing creates the financial freedom for tomorrow. But when combined, you're going to get this hybrid that is called swing trading, also called active investing. And that accelerates your wealth and it reduces your dependence on any single market approach. So I present to you, everybody, the hybrid strategy that changes everything into the market. And I will show you how to make your money work for you without watching the charts all day. Now, let's get into business here. Now, every year, stocks will move 20 to 30% every year, maybe more on an average. So that's a very considerable move, right? 20 to 30%. Your job as a trader is to identify the risk associated with that specific trade to have a really good risk to reward ratio. So you can capture 10%, 50%, 20%, 25%, 30%, 35%. What if I told you that this happens at least a couple of times a year? Wouldn't that be crazy pants awesome? Let's get to it. This is a chart of the Qs, and this shows two cycles. This shows the April to October cycle. In last year in April, we had a low, and from the swing low to the swing high, we had a 61% move. Isn't this crazy? 61% move. What if I told you that there's a way to get and to take advantage of these moves? Maybe not from the very low to the very high, but what if I told you would get 50% of this move? Would that catch your attention? Yes. So for example, this is a rotational pattern. The breakout is here. This is a retest that confirms a higher low. Higher low is the first indication that the price action is likely to reverse with the confirmation. So this is your entry right here, and this is your risk. This is a very conservative entry. Notice that I'm not highlighting the low. I'm not highlighting the breakout for the low, but what I'm highlighting is the higher low that confirms that the market is ready to make a move higher. Here it is. So powerful. And it goes from here all the way to here. At the first sign of reversal, you exit. So yes, you're not going to get about 5% of this move and 5% of this move, but you're still going to get 50% of this move if you're on the swing trader side or active investing side. There are strategies that confirm that. There are strategies that you can use to capture these types of trades. Now, after a move like this, you're getting a pullback, and every single pullback becomes buyable. See these circles over here? They all become buyable. Now, after a considerable move like this of 60%, the market is going to consolidate for a relatively longer period of time. because the market is extended. The market always is in overbought areas when it gets into this phase. So it needs a period of consolidation. So, for example, you're running a marathon, right? So at the end of the marathon, you're going to stop and you're going to relax and retrain for the next marathon. So you're catching a break. For example, the bulls here charged. So they ran, they ran, they ran. And right now they took a break, they took a breather to catch their breath before the next rally. Keep in mind, an object in motion tends to stay in motion. And because of the dominant trend, even with the war going on, with FOMC keeping the rates unchanged, and with everything that has happened from October to April, the market's still strong. And the market, there has been no devaluation. If you look at the stock market, if you look at stocks, if you follow stocks, individual stocks, there has been nothing. And actually, that would suggest that the market is ready to pull back. Oh, the fear generated a hold in price. And what you see here is what we call on the institutional side a forced sell action. It's very common. And what institutions are doing here, they're breaking below support because they want to put their hands on more size, more shares. And the only way to do that is not through this accumulation from here to here or from this base, but to create a rug pull so they can buy this area. So what institutions are doing is they're creating a sell order forcefully. They're selling action, they're stopping the sell action and rotating instantly because they want more size. And here is the rally. Now the second rally is to date, so from April low to right now is 34.5%. That's how much the market ran. In a normal market environment, the market runs about 20% to 30%. Here we already have a high of 30%. Let me take you back to this swing, low to swing high. When the market exhibits such strength where the rally is about 60%, you can expect a measured move higher of at least the same percentage. So another 50% to 60%. We're only at 34% and we have already gone parabolic. Is there room for higher? Absolutely, there's room for higher, right? But you can see here that the price action is trending so powerfully. It's above the 10 EMA, it's above the 20 SMA, and these moving averages are forming the perfect railroad track for the price action train to continue higher. So April 2025 to June 2026 had an approximate 95% move. That is crazy. Guys, if you take advantage of half of this percentage, you're doing good. A quarter percentage, you're doing good. Here's the chart of the SPYs. So SPY from April 2025 to June 2026, 62% measure move. From the swing low to the swing high back in here, so April 2025 to October of 2025, around 42%. And you can see here the same peak below, the rug pull, institutions getting more size, blast off, right? This is the blast off from the breakout, right? 20%. So altogether over 60% move. And this happens in most of the stocks. And some individual names have even a better percentage. Okay, so before getting started and before I explain to you, in detail what this is all about and how you can take advantage of everything, there are 4 things every successful swing trader needs. 1, I'm not going to tell the system first, okay? I'm not going to say, oh, you need to be the best chartist. You need to master technical analysis. You need to have a tool set that you're going to apply to the market for setups. First thing is risk management. Use your risk wisely, your R. That means position sizing for the trade. And here on the right hand side, I have an example. Any stock. It could be like Apple here, it could be Nvidia here, it could be Broadcom here, could be Qualcomm here. We could have, I don't know, Micron here, you could have Amazon here, you could have Google here. Okay, so it doesn't matter. The symbols do not matter. What matters is the allocated risk amount. For example, if you allocate 2% or 3% on a swing trade, you can use, or even 1% to 3% on a trade, you can have a size. Let's say, for example, you have a 500,000 account size, okay, or $1 million account size. And if you have $1 million account size, you could risk, let's say, you could use 0.5%, and that's $5,000. You have a $500,000 account. If you're using 1%, that's $5,000, okay? But the position sizing is going to tell you how many shares you need to buy. The difference between the entry and the stop is going to always vary. Sometimes you're going to have $1 stop, sometimes you're going to have $15 stop, depending on the stock. Now, the difference between the entry and the stop is going to give you a number, and that difference, you're going to compute it and say, okay, how much can I fit into how many shares can I fit into $5,000? Okay. So you can see that the losses need to remain the same, right? 5,000. When you're stopping out, this is the only thing that you need to control. You need 5,000, 5,000, 5,000. On the winning side, this is the variable. You make 15,000 here. That is 3 R's. You make 35,000 here, you have $10,000 here, that's 2 R's, 2 times the risk, 28,000 here, right? So your winnings have to look like this, and your losses have to look like this. Once you control your losses, you control your trading. Number 2, cut your losses short and let your winners run. You have a stop out, place a hard stop, bam, you're out. Move on to the next. Okay, don't cry, don't whine. Have a proven strategy. This comes, as you can see, like number 3, right? To have a proven strategy. You know why? Because you could be a trader that doesn't really trade very well. You're a beginner trader. But if you respect the 3-to-1 risk to reward ratio, you can have a success rate of 40%. Okay, write that down. 40%, and still have a chance of doubling and tripling your account. So that means that 60% of the time you can lose in the market. So this column, if 60% of your losses are in this column and only 40% are winners, you still have a pretty good chance to double your account. Then comes the strategy. When you are tweaking your strategy, the better you become at trading, you're going to increase that ratio. So that means that these losses are not going to represent 60%, but they're going to represent in time 50%, 40%, 30%, 20%, 25%, until you get a win ratio of 90%, 80%, which is normal in the market. And it's normal in a trending market, because in a trending market, anybody can make money. And we are in a trending market. All you have to do is wait for a pullback and buy. And patience. Patience, meaning you have to wait for the trigger. What that means is that you have to have that precise strategy that is going to tell you exactly where to buy and when to buy. where to place your stop and where the targets are. It's not rocket science. But don't look at Nvidia and say, I'm going to buy it today. Not unless you're Warren Buffett or an investor that is willing to hold it for a relatively longer period of time. So swing trading is not about finding every single trade. It's about finding the right trade, find the relative strength and the relative weakness in a strong market environment. You're going to look for relative strength and pull back on relative strength. Why? Because they have a chance of running higher, faster. Velocity. Managing risk relentlessly. Your number one objective is capital preservation. If you see a trade that is not 100% right on the right support with the right setup, with the right parameters for targets, do not take it. And giving winners room to become exceptional, especially in a volatile market environment, give breathing room, because stocks inhale, they go up, exhale, they go down. They need breathing space. Here's SanDisk. This is a trade that we had. And look at the beautiful move that it had. It actually generated 4.6 hours. That's 5 hours. If you would have risked, let's say $1,000 in this trade, you would have made $5,000 in this trade. But again, it's all about risk. Where do you find your entry? At a breakout. This is your entry. This is your stop. Stocks pulls back, cradles into the 10 EMA, rotates and flies. Fabulous move, by the way. All right, Broadcom is another trade that we hold. By the way, Broadcom is going to report earnings today after the close. I don't know if it'll report it or not, but it should report if it didn't already. We are in this trade. This is an active investing trade. The support level is here. If you want to hold through earnings, you pull your stop out and you're ready to actively manage. If you see the price down, breaking through support, you're going to wait at least a day or two until it sets up. Then you're going to add to it, okay, to get a better average cost. Now, you can do this. Everybody can do this. There's not one person that I have met that said, oh, you know what, swing trading is not for me. No, I haven't. And this is what's going to make you money. So even if you have a full-time job, even when you're on vacation or anywhere in the world, as long as you have an internet connection and you have your phone or tablet or laptop, if you're traveling, connected to the internet, and if you have a brokerage account, you are going to make money, because opportunities are not going to wait. What if the timing that you pick for your vacation is the perfect timing for the market to pull back and set up a low and reload, where you can reload at a cheaper price? You're missing it. Money never sleeps. You can manage your money better than any professional, because you get huge fees charged for your long-term money in a 401k. You have to manage it yourself. I mean, you don't have to. You can choose, to have it managed by somebody else, or you can do it yourself. I choose to do it on my own. You get a monthly management fee, and the cheapest one, like the cheapest one, is $300 a month. So imagine if you're working right now full time and you're paying $300 a month just to have somebody manage your money to get like below average returns. That's about $3,600 a year. Multiply that by 30 years while you're working. So you're putting $108,000 in management fees into the broker's pocket. So funds don't care if you make money or lose money. They're going to park your money in an account, and most, a common is to park them in a very conservative account that produces about 1% or 1.5% per year. Okay. So I'm going to talk to you guys right now about about how to avoid some pitfalls. And these are the 5 mistakes that are going to cost traders thousands of dollars. The first mistake is chasing the wrong stocks. Trade the right stocks, not the hyped ones. And by doing that, you have to go down, scan. There are tons of scanners out there. I own like 3 of them that are going to help you find the trades. Find the relative strength and the relative weakness and go by that. It's not hard. Or you could have a pool of stocks. For example, choose 50 of your favorite stocks. 50 of your favorite stocks and scan through them every single day. Just look at the chart. Just look at the chart and place some alerts. Hey, maybe I want to buy this one. If this one is going to get into this level, I want to buy it. Then I'm going to put the stop here, and these are the targets. Mistake number 2, over trading and burning out. This is what day trading does, but it also applies to swing trading because I have seen a lot of really active swing traders that are literally trading their swing trading account or active investing account like a day trading account. More trades does not mean more profits because when you place more trades, you basically open the door to more risk. You're applying more risk. Your R's are flying out of your account. So learn the power of patience and learn to be very selective. Mistake number 3, trading without a plan. Now, you have to have a very simple trading plan that outlines the strategy that you're going to be using, whether you're going to wait for a pullback, let's say to the 21 SMA or to the 50 SMA, place some alerts there, wait for a rotation. It's always very important to wait for that confirmation where the price is showing you that it can take out the high or it can do that rotation. That's where that's how I get in the trades. And basically, your trading plan needs to be very simple because simplicity is going to create a framework for you to take the right trades and not take random trades, because if you take random trades, you're going to have random results. So you need to have a trading plan simple enough and that can fit on a post-it, and that if you take that post-it and give it to your neighbor is going to be able to trade for you. Mistake number 4, letting emotions control your trades. Fear and greed destroy accounts. Here's how to stay disciplined. Have a solid money management plan. So money management is not necessarily all about risk and calculating your position size, but risk management, within risk management, you have to know how to trail the stock, because I've seen so many traders, just get into a trade, the trade is successful, and then they go like, I'm exiting, I'm getting out. So you shouldn't do that. You have to have a management plan that keeps you in the trade long enough, but also delivers good results for you, and say, hey, if it turns around, I'm going to exit here. But trail as the price is going higher and always let the market take you out instead of you taking yourself out of a trade. I do that for my day trading. I do that for my swing trading. I do that for my investing. I have to have a reason to exit. And the reason is dictated by the market. I don't take that decision. And that is so cool because I don't have to do the extra work. If the market sets a top and if it forms a reversal at the top, I am going to lift my stop higher. Okay? So mistake number 5 is not investing in the right education. So most traders fail because they go blind in. They listen to some water cooler discussions on CNBC, or they are going on TikTok and that's the biggest problem. Social media is a big problem for traders because they get distracted from their strategy and they're getting all over because there's so much information right now. It's basically information overload that they are literally bombarded with, and they don't know what's wrong and what's right. And if you're a beginner trader right now, stay away from social media, okay? From TikTok, from X, from YouTube. If those people were making a lot of money or claiming they were making a lot of money, they need to show you how they're doing it. But all those videos are general videos that they go on Google, they put a topic, Google, or Google AI or Gemini or whatever, or ChatGPT gives them some information and they regurgitate it. Okay, so be very careful about that. Now, self-directed trading and investing, it's all about taking control of your financial future and managing your own money, and nobody can do it better than you. The best part is that you don't have to be a math whiz and you do not need to have a finance degree in order to be an exceptional and a great trader. And like I said, you could be a 40% trader, only 40% of your trades are winners, but you could still grow your account. So this is what really matters, because even if you're at the beginning, you could still have a chance of making money. We're living through one of the greatest swing trading markets ever. Okay. In some ways, this is like the year 2000 bubble. Okay. And why is that? Because in 2020, if you were in year 2000, if you were trading at the dot-com bubble, if you were trading back then, all you had to do is call your broker, buy, I don't know, something, and then have it run. Okay, buy something, have it run. Buy something, it ran. That's all you had to do is call your broker at the end of the day, say, hey, buy this. By the end of the day and the next day, you would have money in your account. It was that easy. It was child's play. So why is it now the best time to trade? You have the AI revolution. You have lots of sector rotations that are happening right now. You have the earnings opportunities. I can't wait to see what Broadcom did with earnings. You have the earnings opportunities, and you have the volatility that creates the opportunity, because there's a good volatility and a bad volatility. This is the good volatility. The bad volatility comes from news impact, but that volatility is just a brief interruption in price action. This is the good volatility. So take advantage of it. And I can simplify this for you. Okay, so what is swing trading? So for those of you that are new to swing trading and active investing, it's about catching the sweet spot. So you're never going to catch the very, very bottom, and you're never going to get out at the very, very top. You're going to be waiting for that confirmation at the bottom and the confirmation to exit at the top. Those price swings that play out over days, not minutes, instead of scalping tiny intraday moves or sitting in a stock for years, swing traders ride the powerful short-term waves in the market. That's right. And these waves often last from 2 to 14 days on average. Some trades stretch into a month or two if they are in a strong momentum. So I'm going to show you something very quickly here. So I'm going to go to a chart, and I'm going to share with you a chart of the Qs. What if I told you that I have been in the Qs, I have been writing the Qs as an active investing trade. And to be very honest, I didn't take any profits on it while this happened. So I didn't take any profits on this volatility spike. I rode the price a little bit higher. Once I had the double bottom confirmation here, I just stayed in. Keep it in mind. And I also called it in our service last year. So we were in October and we were still in, we were still in, we were still in, we were still in. And then again, I added in December. Okay. So I added late in December. You see these highs right here. So I added in December as part. It was like December 19th, I believe it was. I added to this trade because we were fast approaching the window dressing phenomenon. So we're like, okay, if the market was so strong, it had 61% gain all the way from swing low to swing high. It's compressing here, like it's gonna fly. Okay, so it's gonna fly. So this is where I added December 19th. So guess what it did? It hovered. Our stop was way below here, so we gave it a lot of room for the stop. It went back up. It went into resistance. Here I was like, oh my gosh, this is where it's going to explode. It didn't go with the window dressing effect, but it's going to go now. It's going to be the January pop-up that is going to happen. No, it went back down. And then it hovered. And at this point in time, I'm like, 200 SMAs here. I don't know what's going to happen. However, I looked back at the market and I always select another cushion of support. And that my alternate cushion of support was this one right here. And I said, I am going to keep, so I position sized for these lows right here for 570 actually. And then as we were approaching this grind lower, I'm like, you know what? April of last year, and we know that April is a very strong seasonal month, and April typically reverses everything. And I was expecting this because of the seasonality. So I said to my team, and I said, I am going to give it room to 550, a little bit below 550. Guess what? It didn't even reach that spot. It went 555. It rotated. And by the way, I added to it here at the rotation because it was a complete buy setup. I added to the rotation and I'm still in. I'm still in. So this is a trade that has originated here at this level. Let me just show you the level where I entered. This is the level. This is the rotation at 449. Let's say 450. Let's round it up 450. I let it rally. And right now in April, I added to this. So all in all, I wanted to show you how much this trade produced. 65%. 65%. And when I took this trade, okay, I want to show you the risk to reward ratio here and still have a little bit more time. Okay, so here's the risk to reward ratio. I position size for all, so for this low, and I went, okay, let me see if I can do this. Sometimes this is a little bit tricky with Zoom because it doesn't really allow me to make these kind of moves, but here it is. Okay, here it is. Okay, just I want to show you to the R. Okay, this is a 6.1 R. This is a 6.1 R trade. The red segment represents the risk. The green segment represents the gain. Now, when you look at this chart, 6.6 R's is an amazing type of trade because if you look through the performance, and if you, for example, are looking to double your account, you need to have 2 R's per 2 R's per week. That means you need to have 8 R. I'm sorry, you need to have 8 R's per month. Okay, eight R's. This trade alone here produced 6%. And we stayed in. We had the conviction to stay in. Okay. So bottom line, swing trading is fast enough to keep it exciting, but slow enough to stay sane and precise enough to consider banking profits. Here's the trade that I called here, right here. Okay. And we took this trade into our program at $148.70. This is a net. This is last week. Today is doing an inside bar into resistance, but look at the beautiful move. Knowing how to identify these trades is crucial. Play the trades that are in play. Trade the trades that are in play. This is the extended target above all-time high, so it's around $200 for this move. So once it breaks above 180 resistance, this is the next measure move that it's going to go. It's going to go or not. But at this point in time, I am trailing. You have the option to take partial profits into resistance because there are no guarantees that the price is not going to get rejected here. However, you can also keep the entire position and just trail the whole entire position. Okay, the way I trail this is, and by the way, this is a daily chart. You could see that price action is very extended from the 10 EMA. I would apply a stop below this low right here because chances are that if we're going to get a red candle that breaks below this low, you're going to get a pullback most likely into this confluence area. You have support from these prior highs and the rising 10 EMA. Okay, so take some partial profits always. Cisco, this is an image from yesterday. Okay, so Cisco, I called it a breakout this Monday, and we took it long. Okay, this is the entry, boom, explosive. So there's one thing that you see in common here. These trades become explosive once we get in. Dell, I called this buy on April 1st. I mean, this is like unbelievable, right? It went up 192% and it's still consolidating into the highs. I can't wait. I can't wait to add some more into it. I took some profits at around 450 and I'm waiting for the next reversal to reload on it. Dell was exceptional. AMD, this is a classic pullback buy into the 10 EMA. Again, have it in your trading plan. This is a doji bar rotation, bullish above. You can see this chart, this stock went up 23%. Beautiful, right? Look at the risk to reward ratio, at least 2.5 Rs into this high, and this is from the end of May. Now, money managers and hedge funds live mostly off commissions and fees, and you're just literally an account number to them. Whether the stock or fund performs, or if it doesn't perform, they get paid. They don't care. They get paid. So Barclay Hedge reported that over the past 5 years, the average hedge fund in its universe produced a net annualized gain of 7.2%. Don't you want to make more money? Learn how to trade it. You could do it on your own. So swing trading is the most effortless and convenient style of trading because you could do it from anywhere in the world. It doesn't require you to have 20 monitors. You could do it off a laptop. You could do your analysis. There are so many tools that are going to help you right now. That's insane. But you need to know and respect the rules of the game. Plus, you need to be patient to wait for the setup to happen. All right. Now I'm gonna share it with you. Oh my gosh, thank you so much. Thanks, Michael, for sharing. Okay, that could be a reload opportunity. Maybe if we have time, we're gonna take a look at that. So here's the 5-step swing trading blueprint, and this is the exact process. Step number 1: find the institutional money flow. See what sector is hot. Scan through that sector and find 5 stocks that are outperforming the sector itself along with the market. So that means that if the tech, for example, is leading this week, you're going to go under the tech sector and select 5 of the most powerful stocks. Okay. Now, when you find these stocks, you're going to be looking for buying opportunities. You're going to look for pullbacks. You're going to look for breakouts, whatever strategy you have in your toolbox. Step number 2, identify the relative strength. Relative strength is going to show you and is going to produce an accelerated run within that sector, within that group of stocks that are within that sector. Because when it has relative strength, if the market, let's say, if the Qs are up, let's say 1.5% today, your stock is going to be up 3% or 5%. That means that your stock has relative strength. So if your stock is sitting on a breakout pattern, while let's say the Qs are pulling back, that stock has many more chances of exploding higher faster than the market. Step number 3, wait for pullbacks into support. So look for these pullbacks, but don't buy at support. Novice traders buy on support. Novice. You don't buy at support. What you do is you wait for a rotation or a pattern to develop at support. That's the right thing. You don't sell at resistance. What you do is you look for an area to trail your trade. Oh, it's fine. If you want to take some partial profit, something like 0. Like let's say a 1/4% or even, I don't know, 0.5% or something, you can do that, but no more. Step number 4. Define the risk before the entry. Look where the entry is. Look where the stop is. Let me see if we have an example here. So how do you define your risk? You determine where your entry is. Let's say this is the breakout. You determine where your stop is. So this is your risk. And you determine where your target is. The targets are determined based on either extensions, if the stock is trading into all-time highs, or into prior highs, and look to the left-hand side of the chart, because the left-hand side of the chart, guys, is your crystal ball. That's what it's going to tell you where the stock is going to run. Okay. So define that entry risk, define where your entry is and your stop is. And scale out into strength. Like I said, you could scale out or you could keep the whole position. I usually don't like to scale out and I keep the entire position active. We talked about this. This is Micron. This is another monster trade. This is from swing low to the swing high here, 121%. Crazy, right? Taking into consideration that the norm is about 20 to 30% move to the upside and pull back, right? So when you're having a 30% pop up in the market, you're expecting about, let's say, 50% or 10% pullback into the market. That's normal. This is crazy what we're getting here. This is 121%, very shallow pullback, another almost 50% here on the rally. I want to show you an opportunity. I haven't looked at Hood today. I have a buy limit order at $94.30. Bull is next in line in my portfolio for a breakout. So this is where I have my buy limit order, and I'm looking for a continuation higher into 100, 120, and into this high of about 140 to 145. Okay. I wanted to share with you something that I'm watching right now. Maybe you want to watch it, maybe not. Palantir, this is a trade that we have been for some time. We had a breakout, beautiful breakout. Of course, the price action is going to react into resistance because we have a double whammy. We have the price action resistance from these highs. We have the low from here, from back in November, plus we have the 200 SMA. So yes, you take some profits into this area and then wait for the pullback, either trail or wait to reload. I'm personally waiting to reload. Microsoft, beautiful breakout, retest of the 200 SMA. Never underestimate the 200 SMA, especially on a daily or weekly or monthly chart. And the price action gets rejected. Now, let me tell you a secret. Oftentimes, after the breakout happens, you can see here that the risk is relatively high, right? Because this is the top of the base, this is the bottom of the base, this is the breakout, this is where you buy. Okay, this is where your stop goes under the lowest low of the lowest pivot that you have. And usually after you have a breakout like this and test of resistance, the price action always seems to be pulling back. The next setup that is going to happen is most likely to happen into this area, let's say into the 425. And if it rotates into this area, this is going to be the better opportunity to buy. I'm already in, but I'm looking to reload. This is still going to be the stop, but I'm looking to add. And the addition, so for example, in this case, I'm going to buy over this high, going to place the stop below the low. So I'm going to reload here, calculate my position size for here, and then this is going to be as a second trade. So I'm going to be adding as the price is going higher, not lower. So who's doing trading for? I mean, let's be honest, it's for everybody. If you're living and breathing and eating and, just doing whatever a human is doing, yes, you are ready for to become a swing trader. It's for busy professionals. It's for part-time traders, retirees, individuals of all ages who want a better tomorrow. If you want more money, this is for you. Okay. So when to buy swings? Okay. So let's start with this. Buying swing trades when the risk reward is stacked in your favor. So always look for a really nice tradable void to the next resistance. So make sure that your entry or stop is tiny and your reward is somewhere, your resistance is way up there, at least 2 or 3 times. Timing is everything. Scan the market at the end of the day and also look at the trigger time. So often the best follow through comes in the first 30 to 90 minutes of trading or into the last hour, the power hour. So we have 2 power hours in the day. We have the first power hour and that starts the day and the last power hour that ends the day. When not to buy swings, never chase the tops. Because once you see that there's a stock that is literally flying like Cisco, you go like, oh my God, I'm gonna get in. Okay. Never chase the tops because when you are buying it when it already exploded, your risk is still going to be the same. So your position size is going to be like really bad. In the middle of no man's land, and if it's choppy, you buy of bullish trades above the base, stop below the base. Ahead of major news or events in a dying trend, a low volume, illiquid stocks. Bottom line, swing trading is about precision and patience. Buy near support or breakouts with a pattern. With a pattern. Never buy into FOMO spikes, chop zones, or downtrends. Now, here are some simple rules. These are the entry rules that I use. Trade with the trend. The trend is always going to be your friend. When you see higher highs and higher lows, wait for the pullback and buy that rotation. Near support, confirming a breakout of resistance. So that means of a buy setup or a breakout or an inside bar or something that is going to confirm that the price action is ready to go higher. Okay. Risk management rules. Risk fixed percentage. 0.5, 1% in swing trading, depending on your account size. You could actually go 2% or 3% is fine. Don't risk more than that, because if you find, let's say, 20 trades that you want to take, you cannot take all of them because you're going to run out of money. Position size basing on the distance between the entry and the stop. And trail stop into strength, protect your profits, and never gamble. So hold positions, usually 2 to 14 days. Respect the power hour because you're going to get a lot of information from that. And also mindset rules. Kill the FOMO in you. If you miss the move, there's another setup that is coming right around the corner. Just scan. Keep on scanning. Keep a trading journal. So important. Cut your losers fast and let the winners run. Here are some of the testimonials that are from some of my traders. Just gonna swipe through them. Okay. Now, I want to invite you guys to my program, which is the Stock Swing Trader. So the Stock Swing Trader is basically more than a newsletter. It is a newsletter that is being sent to you on Monday morning. So on Monday morning, when you wake up, the newsletter is going to be there for you. In this newsletter, you're going to get a comprehensive market analysis, macro to micro. So top down. You're going to get new market focus and themes. You're going to get the sector performance, market performance. You're going to get the technical market overview for trades. You're going to get the earnings calendar, economics calendar, everything to get you ready for the week. More so, you're going to get access to the performance portfolio. The trades are also going to be in the newsletter explained. What sector, what determined me to look for the entry, where the stop is, and etc. And all these values, the entry, the stop, the targets are going to be in a separate performance portfolio. Okay. Now, you're also going to get access to a private X feed. Okay. You're also going to get a platform layout for those of you guys that are using Thinkorswim. More than happy to share this with you. You're going to get student personal support through Q&A. You can send me an email. You could send me a stock, for example, and say, hey, I'm looking at Apple. Do you think it's a good buy now? Or I'm thinking of buying Apple here. What do you think? Okay, so I'm going to answer that question. You're going to get the risk sheets that's going to show you how to position size. And you're also going to get a money management risk sheet. What do you do in target 1? What do you do in target 2? What do you do at target 3? And so on. Now, the Stock Swing Trader is $299 a month. Today only. Today, because the prices are going to go up. And I think they're going to go up this weekend. It's going to be $199 a month for the first month, and then it's going to be $299. If you want, you can join this link over here. So I'm going to type it in the room for you guys. It is gotradeoutloud.com/join. And the best part is that you're going to be able to activate your coupon, which is now 100. So type it in at the checkout. That's the coupon code, now 100. So it's $100 off the first month, and then it's $299. The price is going to go up in June. Like I said, it's going to go out this weekend. And the program is for action takers, and action takers are always money makers. So if you want to take advantage of this very tight opportunity, it's from now till midnight. Okay, so it's about 7 hours. Okay, so the bottom line is that, oops, sorry about that. Okay, here we go. It's your time to decide. So are your money parked? Are you still sitting on cash right now? Because it's a great time to be in the market. So ask yourself this: will today be your day one, the moment you embrace the change and pursue your dreams, or just one more day that slips away? Say, huh, maybe tomorrow, maybe next month. You're gonna find an excuse. So action takers are money makers. So thanks so much, everybody, for your presence. Thank you so much, John, for having me here on today. It was a lot of fun.
All right,
So
Anka, thank you. Great show as always, and hope you have a nice summer in the far north of Michigan.
thank you so
Um,
much, John.
and look forward to having you back in our September summit.
Absolutely. Thank you so much. Good
And
luck,
just remind
everybody.
everyone the link for Anka's product is in the chat box on the right. That'll take you to a dedicated sales page only available today.